and not just the technical side. Something that you will come to learn as far as how trading works is that it will always be 80 to 90% mental. That's going to be your downfall or the thing that actually brings you out on top above your peers, right? So when we get to the start of this, we're going to talk about losing, right? Something that not any of us want to talk about, think about, look at, right? Think about it at all, just in general. But losing, something that we cannot avoid in this game of probabilities. And the reason I say this is because obviously we understand that the market is going to move how the market is going to move, right? So if we can apply this mindset to our trades, then we can now start to get a sense of higher probabilities equal higher success, right? So if we start to now place multiple probabilities on a certain setup or a certain narrative, then we can start to get into these trades to where we are much more confident in our analysis, much more confident in the way we look for trades, much more confident in how long we hold trades, right? It's now going to start to bring you that profitability that you're looking for. And you'll come to start to notice that with these setups and with these mindsets and everything that starts to come to play, that comfortability that you'll start to reach is going to be much greater than anything you could find, right? Based off of something else, meaning even just signals in general. Just based off of signals, right? You're not still going to have that confidence to be able to say, well, why did he signal that, right? And then going to look and say, okay, he did it because this, and this. Now I can start to get into trades with that same type of mentality, right? Instead of doing that, now you have that need to have that person or a few people or certain group or whatever it is. You have to have that need in order to be profitable. But now allowing yourself to go onto these charts, find these journals, right? Journal your trades and look at past price action and past things that have happened can now give you a way better analysis and more comfortability when you are looking to take trades, because now all of a sudden you know what to look for, right? You know how to act, you know what to look for when that play comes into play. You are now entering, setting your stop loss, setting your take profit, and walking away. One thing I will tell you is I apologize if I sniffle or something during the stream. This weather has been kicking me. This happens every single year. But we're just going to go ahead and get into this today. So if I sound a little muffled, that is why. But let's first talk about how we can take a loss with a trading mindset versus an emotional mindset. And this is going to fall hand in hand with risk management, right? So we'll just go ahead and put risk management up here at the top. Put this down, put down risk management. Let's make this a little bit bigger as well, 2024. And we'll understand now how this can help us take out probabilities when we're looking to trade. Everyone talks about risk management. It's something that not a lot of us want to do, right? Because we just want to enter our trade, not think about it, not even have to manage risk. I want to make the most I can out of that trade, right? And then it gets you into a loser's mindset, and we'll talk about how that can start to come to play too. So risk management, huge factor in eliminating emotions that are going to come up to play when you are losing, because now you can control the amount that you are losing. So if I'm okay with a certain amount that I'm losing, whether it's 0.25, 0.5%, 0.75% of my entire portfolio, if I'm okay with losing that amount before I even enter the trade, that's now going to breed that confidence that's needed to enter that trade and to hold for that take profit. If I'm not comfortable with what I'm risking, that's going to bring much more emotional factors into play. If I'm risking, let's say 5% or even 10% or something like that, right? That now brings me not the comfortability that I want. That now brings fear. That now brings emotion that's going to come into play, something that you do not want to feel as a trader, right? Something else too that we have talked about as far as emotional decisions go. We understand that investing itself is an emotional decision. Entering a trade is an emotional decision, as you are placing money on a trade, right? That has probability. There is probability that you could lose. There's probability that you could win. But there are a few things as traders when it comes to losing that we can start to implement to be able to bring us that comfortability and to start to find that edge within ourselves so that we can be better off. And what I mean by this is that with risk management, you are now eliminating, one, the fear of losing. Why are you eliminating the fear of losing? Because you know what you're going to lose, right? If you were to lose on a certain trade, you know exactly what you're going to lose. You should be okay with that as far as how your risk management stands. A 5% loss, right, means that you only have 20 chances to blow your entire account, to blow a 100% account. So now if you take that and you put that to 0.5, you now have double, triple, quadruple the amount of times that you would be able to take with lower risk management. So now taking less risk management and risking less on certain trades is going to allow you to trade the chart and not trade because you're trying to make X amount of money in X amount of time, right? Because that is not what trading is for. As much as YouTubers, streamers, mentors, people out there, right, that talk about trading in general, if they're going out there and saying, hey, I made X amount in X amount of time, you can do it too, and make it seem simple, that gives you that false narrative, that false mindset that 90% of traders fail. So if 90% of people are out there and saying, hey, this is really easy, I made X amount in X amount of time, you should be able to do it too, right? That's going to bring you the mindset that we don't want. That's going to bring you that quick money, that fast money mindset, and get you into a gambling mentality as well. Something that we don't want to look for. So risk management is going to be huge. Personally, I like to do 0.25 to 0.5%, so I'll just put that down. 2.5% of my port on each trade. This now gives me the ability to risk many more trades, right, than I would be able to with even 1% or 2%, 5% up the ladder as far as that goes. So if I'm managing risk, I can understand, hey, this is what I'm going to lose before I even get into that trade, and I'm okay with that loss. That's now going to bring the ability to trade the chart and the chart only, taking profits at structural liquidity, right, and entering at certain areas that you believe are fitting your narrative as far as that comes. So taking a loss with a trading mindset versus a emotional mindset. So as far as an emotional mindset goes, we as humans hate to lose. That's just how it is. We hate to lose as humans. Losing is not something that we want to be a part of as humans, right? But if we understand that in this game of probabilities, in this game where losses make up your PNL, where losses are a part of the game, no matter what, a loss is going to occur based off of how you trade, right? No matter what, you are going to lose. So now that you have that probability mindset saying, okay, if I have X, 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 and this set up to play, right? I have all my narratives, all my rules are now coming into play. I have multiple probabilities telling me that, yes, price is going to go this way, and I can now enter my trade and hold it for that certain take profit. But if we're not managing risk and we're just allowing ourselves to enter because of one, maybe the action as far as it goes, maybe I just want to catch a top or want to catch a bottom, then that's not going to bring that mindset that we want as traders. It's not going to bring that consistency that we are looking for as traders, because now all of a sudden you made, let's say, 10K on a certain trade. And so you're now like, oh, I made 10K, I can do it again, right? Let's just do the same exact thing. All I did was enter, I woke up to money. And now all of a sudden you're doing the same exact thing. And over time, your portfolio now sits at zero, or you're negative in your balance, right? Because now you haven't allowed yourself to understand why you made money on that trade or why that worked. Because if I can go look back and say, oh, okay, I made this certain amount, right? I made X amount because of this certain trade right here, and I start to replicate that at the same times, right? Looking for the same setups. Then I now have breeded repetition. Repetition is going to bring the comfortability, and then following that is going to bring the profitability, right? So if us as traders are not managing risk at all, if we are not managing risk and we are just entering trades just to enter trades for either the action, for what we believe it could bring us, right? Then at that point we're gambling. We are gambling. We are not trying to set that business type system that we need as traders, entering that system. Once that system comes into play, entering the trade, walking away, that's not all coming to play. And you'll start to see when you start to get into these trades and when you start to manage risk and when you start to journal what you're doing, that is going to bring so much more comfortability in everything that you are looking at, because now you understand your false narratives, right? You understand what you do good. You understand what you don't do good. So now you can avoid certain trades that you are looking to get into. You can avoid certain R&Rs because, hey, even though that move might be big, right, I can't risk that amount on that certain trade. And it's now going to bring you to get into the market at times that are going to allow much more profitability than just being in the market to just be in the market, or just being in a trade to just be in a trade, right? So if we can think in probabilities as we understand that, and I'm just going to write this down, your P&L is composed of wins losses, and break evens. If we can understand that this is why our chart reads the way it does. Your P&L is composed of wins, losses, and break evens. So losses and break evens are a part of who you are as a trader. They will always be there. Losses will always be there. Break evens will always be there. So if now I can get into these certain trades to where, hey, I'm losing on X amount of trades because I'm trading at this certain time, then I'll say, okay, maybe I shouldn't be looking at that pair during that time, right? If let's just say I'm trading a JPY pair during a US session, right? And it's not moving how I want it to move, and it's not following the steps to occur that I'm looking for, then all of a sudden I look back and I say, oh, I don't understand my strategy, right? I don't think everything is going to come into play. How is this going to work? And then you start to get into this loser mentality to where now you have FOMO, now you have FUD, and now you have all these emotional decisions coming into play because you haven't stuck to your strategy and you haven't stuck to your plan. You can be profitable trading EMAs. You can be profitable trading triangles as long as you consider the probabilities and how they come to play. You manage your risk, so you're only losing 0.25 to 0.5%, 1% on a personal, right? If you now have these abilities to where you know what you're going to lose before you even get into the trade and you're okay with that, then that's going to take away that fear. That's going to take away that FUD. That's going to take away that FOMO as well. Because now you're not just getting into trade to make money. You're getting in the trade based off of your system, based off of how it goes, and you now have a certain take profit that you can take that to. So understanding that your P&L is composed of wins, losses, and break evens will be the best. Will be the best for you, because now you're not only looking for wins. You're not only looking for the winning trades, right? When you're back testing, you're not only looking for winning trades, you're back testing to actually back test to say, hey, what would my mentality be on this certain trade right here? Would I take it to the upside? Would I take it to the downside? I play it out and I let it go. And now I can get that understanding of, oh, okay, I was wrong right here because this, and this, or I was right. And now all of a sudden that breeds that confidence again that we were talking about, that we want to see as far as how you look to trade. So understanding that risk management is going to be one of the biggest factors in trading as far as how you can become comfortable and confident is going to be huge. And understanding that your P&L is composed of wins, losses, and break evens will also bring you to that factor, because us as traders are not here to trade for catching the bottom. We're not here to trade for catching the top. We're not here to trade because we think we're the best, right? There's no competition. The only competition is within yourself and is within your mindset. And if we can't take that competition and put it into play and try to actually better that within ourselves, then we will be stuck in the same exact mentality, the same exact system that we had before. We will be stuck over and over again, and that's what we call the loser cycle, because now all of a sudden we are looking for losing trades over and over again, right? And we get super emotional. We get into trades that we shouldn't be getting into, and then it's just stupid at that point. We're just sitting there saying, oh, well, that doesn't work, and it doesn't work because of this, and this. And now all of a sudden I have no idea how to trade. I've been trading for X amount of years and I don't know what's going on. It's very apparent. You guys can see it even within these chats. There are traders in here that have been trading for 3 to 4 years, maybe even 5, 6, right? That have done the same exact thing over and over and over and over again, and they continuously lose money. They don't try to change that within themselves to try to better themselves, and all of a sudden, right, they're at it looks like they're at the same exact spot that they were when they first joined. And you may be looking at that and saying, that is me, or you may be looking at that and saying, that isn't me. I'm going to let that person be that example of what I should not do when I'm going to look to trade, right? So risk management, huge. Understanding that your P&L is composed of wins, losses, and break evens, also huge. And now let's talk about understanding your edge. So one of the ways that we can understand our edge as a trader, the easiest, most simple way that you can understand your edge is through journaling. It's going to be through journaling both your losses and journaling both your wins. I journal my my back tests as well, because if I can go back and say, hey, I back tested this, I was right or wrong on this trade because of this, then I now have the understatement of I fall weakness in this area, and I have strength in this area. So how can I hone that in and start to have strength in both areas? Because now I've journaled, now I've gone back and understood why I lost, and now I've gone back and understood why I won. So if I can take both of those mentalities, both of those mindsets, then I can say, okay, now I understand what my edge is, when I should be trading, and why I should be entering that certain position. Very, very huge. We want to be professional traders as far as how we want to trade. We don't want to be the person who just caught the top or the bottom 2-3 years ago and now we're just irrelevant, right? Because anybody can get lucky. Anyone can call themselves a trader if they open up a trade. Anyone can download Bybit, put $5 in there, open up a trade, and say, I'm a trader, right? But what separates the professional traders from the gamblers, right? And that's going to come through journaling. That's going to come through risk management. That's going to come from treating it as a business and not a way to make quick money. Because if we're treating it as a way to make quick money, we're going to quickly lose our portfolios. That's just as simple as it is. So journaling, huge. Risk management, huge. And understanding that our P&L is composed of wins, losses, and break-evens is also going to be huge. So one tip that I had heard from somebody, I can't remember exactly who it was, as far as how we can take losses, right, not have the fear of losing, is managing risk. And how we manage risk is going to be, hey, if I'm putting 0.25% of my portfolio on this trade, I'm okay with losing that before I am even in the trade. So if I'm okay with losing X amount of dollars before I'm even in the trade, that's going to allow me to enter the trade because now I'm okay with the loss and I'm okay with the win. If I win, I win. If I lose, I lose. We need to understand that in this game of probabilities, if we're thinking with that probable mindset instead of I can't lose, then we'll maintain so many more winning trades and we'll be in much more trades because now we aren't afraid to take a trade. Now we aren't afraid to take that trade because we think we're gonna lose, right? Or we have those mentalities to where we're just like, that's not gonna work. Maybe, I lost X amount last time I did this, so I'm just gonna let it go. And then you go back and look on the chart and it went your way. And now you're like, I don't know what to do at this point in time. And you feel stuck, right? Even though you've been trading for X amount of years, X amount of time. If you don't put in that work and you don't look back and journal your wins and journal your losses, journal your back tests, journal your forward tests, demo trading, right? If we don't practice and we don't actually put that effort in ourselves, then we aren't going to reach the level of profitability that we want to reach. It's just as simple as it is as far as trading goes and how you see those guys profitable long term. You can go look on YouTube, you can go look anywhere. Everybody who has large ports, right, or a bunch of people following behind them for how they trade has this professional setup down. They have a comprehensible system to a 10-year-old, right? They could go to a 10-year-old and say, hey, I look for this, 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 and this. And the 10-year-old could say, okay, that makes sense, right? Because it is simple for them. It is a system that they have down, is a system that they have worked on and continuously honed in on their strengths and weaknesses over the years. And now that that system can be seen as a profitable system from other people as well, then they start to maintain that backup, right? Those people behind them that are saying, yes, this does work. But we do need to understand that if the work isn't put in, then it's not going to hit. I mean, you could look at ICT, right? His mentorship, as far as that goes, you have people out there saying, oh, it's too hard, so I'm not going to trade it. And then they come back 2 years later, like, why am I still not profitable? Right? Because they didn't want to put in the work. They wanted the easy buy here, sell here. And then all of a sudden, right, that doesn't teach them how to trade. Instead, it just teaches them that gambling mindset because they made X amount of money on this certain trade right here, right? So all of these things that I have here up on the screen right now are going to be huge as far as how we can start to find that edge and start to run that way, right, with our mentality and with what we are looking for as far as that goes. So I'm going to go ahead and delete these, and then we'll talk about some losing trades. We'll talk about losing scenarios where you can go back and say, hey, I lost because of this, and I'll understand that, right? So let's just say that I was taking a long or something like that within this area right here. We'll put down a long position at these highs right here. Let's say I had a stop loss on a lower time frame entry over here, and I ended up getting stopped out of my trade before the trade actually went my way. So this is how it looks like on a daily chart, right? You say, okay, broke structure upside, came into that domain candle before, it should take out these highs right here. So if we're sitting here and holding up to these areas right here and we're stopped out on our trades, we can say, hey, why did that happen? Now let's go back and find out why. Let's notice that, okay, this wasn't a wrong trade, right? But where should I have held this take profit at this point in time? This was the break of structure upside. So where's that weak high that I could have looked to take profit after we entered in my zone right here? Well, the take profit should have been here, right? Second take profit after this came should have been this buy side liquidity right here. Now I can go back and say, well, it wasn't a losing trade. It was a losing trade because I wanted it to come up here. I wanted it to show this, but it hadn't showed that yet. So now all of a sudden I can go back and say, okay, this is what I should have done. Next time I'm going to look to take profit much sooner until that reversal happens. And then now that we get that reversal and you have your entry on a demand candle over here, you can now enter and hold for that overall take profit within premium of these areas right here. Instead of catching it right here, trying to hold up to here, right? And then it does it again. And you say, I'm going to long again right here and do the same exact thing. And you get stopped out on your trade again. And then you're like, well, I just got stopped out twice. So screw this. It's breaking to the downside. I'm going to short it, right? And then you short it and you're out of your bias. And then all of a sudden you're stopped out on your trade and it goes exactly the way you've been looking for it to go for X amount of days, X amount of months. These setups like this, how they come to play and how they're going to start to come to fruition on your end as far as how your mentality goes is going to bring much more comfortability, because now all of a sudden I go back and I say, hey, I would have lost on this trade at this point in time. So now if I can wait for the manipulation after the break of structure to the upside, I can catch lower time frame entries within this area and catch the confirmed trade. I can go back and back test to figure out why I lost on that certain trade and then take that and apply it to my next trades. And now all of a sudden I'm taking steps forward. I'm not in the same mindset. I'm not in the same zone that I have been when I was losing. Now I'm taking steps forward because I know why I lost, and I can go back and look at as far as how that goes, right? A lot of traders and a lot of people want to find the best strategy. They want to find the best this, the best that. But at the end of the day, you can have the very best strategy. You could have 100% win rate strategy that literally never misses. But if you do not show that comfortability within yourself as a trader, you're not going to take those winning trades. You're going to take losing trades over and over and over again because you're scared of certain situations or you're scared that you're going to lose. But if we can understand that, hey, I'm okay with what I'm going to lose before I even get into that trade, then that's going to bring what I need to bring to hold to my take profits, right? Because a lot of the times, if you're risking way too much on a certain trade, you'll find yourself closing take profits way too early because you like how the money is, or right, green is green, and you're like, okay, that's good, it's all right, I'm just going to take this amount because I risked this much on it and I just want to take this money, right? I just want to take it, I want to take it from the market. And then you go look back and you could have made X amount more, right? If you would have held for that certain take profit, or as far as that goes. But us as traders need to understand that thinking in probabilities is going to bring us that profitability that we want. Probability is going to bring that profitability, because now if I say, okay, I understand that the market could do many things, right? It could do 5 or 6 certain moves within a certain narrative that we have. If that comes into play, if that's what I'm looking for, and I understand that, okay, it could do this, 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 and this, then I could get into trades. Because now all of a sudden, I'm not worried about if the market goes up or if the market goes down. I'm worried about my narrative, my plan, my setup. And now that my setup has come into play, I can enter that setup and walk away, right? So something that is very, very important is going to be journaling. And I'm literally just going to say this over and over again. Because if we're not journaling, we literally cannot find how we're losing or how we're winning. And if we can't figure out how we're losing or how we're winning, then we can never move forward. We'll be in the same spot, the same mentality, the same mindset over and over and over again. So that was just quick tips as far as how we can start to better ourselves as traders, as as these traders, right? As what we're looking for. But I want to go ahead and get into some Bitcoin, into some ETH analysis, talking about everything that we have talked about before with our literally 1 through 5 intro to SMC classes, market structure, Wyckoff, these confirmation zones, imbalances, fair value gaps, right? Everything kind of bringing it together now to hopefully to get you guys to understand why I'm looking for certain narratives, why I'm looking for certain trades. Once that comes into play, we'll start to get that started. So we're going to go ahead and look at ETH today, something we've been talking about for months. I could even show let's just go ahead and show my perp flow chart real quick once this loads up for y'all. But this narrative that we have been looking for, this type of trade we have been looking for, back into discount of this zone right here. I'll go ahead and show my 2-day chart. I mean, this was a month ago. I want to say it was a month ago. You can just draw this out. Price range. Bring it out from here. Yeah, about a month. So 34 days. She's been following beautifully. I'm looking for delivery into this fair value gap, this 2-day fair value gap that had saw our push up all the way into premium overall. Let's go ahead and get rid of this volume to make it a little bit cleaner to see what we're looking at here. But we can see that we created a new high right here, came back down, created a higher low, broke upside. Where is our area of demand? With imbalance, we can see right here, price was pushed down, rated liquidity right here, broke structure to the upside. We have that 2-day imbalance that is left behind as well. And we are starting to come back into discount. We can see the demand that was exhausted on this move to the upside right here. Once we saw the rate of that buy side liquidity, we saw the move down into discount again. And it was at this area, this point in time, that I was looking for the delivery into this 2-day fair value gap right here, this 2-day imbalance. And once that occurs, once we get that reversal within these areas, then I can look for higher prices overall. First, take profit looking at the week high, and then second could be the supply zone overall, and then third could be this, I think it's a daily supply zone that we have up here. Yeah, 2200. But this is that behavior that we want to see as we're coming into these areas right here, meaning we're manipulating lows and starting to leave highs. We're starting to manipulate these lows right here, and we're starting to leave this clean buy side liquidity in areas of discount that had sponsored this move to the upside. If we notice here too, on the daily chart, we can see if we look left, this is where we got that break of structure to the upside from this internal high that caused this internal low. We got the break, your candle before lies right here, as well as a 2-day fair value gap. Now we can see multiple confluences coming into play as well. I do like this 1156 area as far as possible long entries. We've been looking at the same thing for a month. Plan hasn't changed until the plan changes, right? So if we come down into this area and we break structure to the downside, instead create that area of supply, right? We do a little accum to distro, and then we break structure to the downside. I'll be looking at entries here to take it to the downside. If not, if we still hold this narrative, if we continue to manipulate lows and show a break of structure to the upside on the daily chart with imbalance, with impulse, same thing we're looking at over here, then we can look to take those trades, take them to first this weak high right here, as this low caused this weak high. And if we maintain that discount, right, maintain that demand, then we can see delivery up into these highs right here and into this 2200 supply zone that I have marked right here. But understanding that probabilities are going to come into play again is going to bring that confidence. So if I look at here and say, okay, this is my POI, I can understand that price could do both things right here. It could come into this POI and it could break structure to the upside with impulse, giving me what I want to see, right? Or it could break structure to the downside, create supply, and instead I'll have another opportunity. Because us as smart money traders and us as institutional traders don't need to catch that big move. We have those lower time frame entries that allow that R&R on lower time frame narratives, right? So if I'm in a trade right here, let's just say price comes down here, I'm on lower time frames, the 4-hour chart or the daily chart, I see a break of structure upside and a weak high is presented, right? Price comes into here, I get a weak high and I get an entry. Let's just delete this right here. But let's say I have an entry right here. My first take profit is this weak high, and then my second can be for that overall narrative. Let's say it comes into this area, I enter my trade, it moves up, that weak high is taken out, it mitigates the supply zone, and then it drops. Right, let's say it UTADs and drops to the bottom and creates that supply that we were talking about. even though I was technically wrong on the overall setup, because I took profit within a feasible area based off of what the market had shown me, I'm still out of this trade. This was still a profitable trade. I was still able to maintain profitability on this trade, even though it didn't go my way. So now we can understand as institutional traders that thinking in those probabilities is going to bring exactly what we need, because I don't have to know where it's going to go. I just have to wait for my setup. I have to wait for that to come into play. Once it does come into play, I can enter, taking it to the weak high or the weak low of that certain narrative. So understanding those probabilities is going to be huge in trading. It's going to be huge because this is a game of probabilities. This is a game where you will win. This is a game where you will lose. And this is a game where you will break even. So if we don't blame that on ourselves emotionally and instead think in probabilities because, okay, the market could do this, 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 and this, then now we have that confidence needed to enter those setups, even though the market is wherever it is at, right? I don't care what the price is. I don't care if it's a bottom. I don't care if it's a top. As long as it is showing, as long as that narrative comes into play, then I can look for those trades and gain profitability on those trades. But yeah, this is that little per flow chart to show you guys what we've been looking for about a month and a half now. We're finally coming back down to this area. If we can take out these lows, keep these highs right here, maintain that buy side liquidity, maintain reason for price to continue to the upside after mitigation of this zone right here and a liquidation of these early longs that we have right here, then we could easily see continuation to the upside from there. Same with Bitcoin as far as that goes. We'll look at the Bitcoin chart. Same exact thing, same exact type of delivery. We're looking for ETH to come down to, I believe it was 1100 area that I was talking about before, but to fill that 2-day fair value gap. What is that going to show for Bitcoin? What have we been looking for months? That delivery, again, into those 17.5 lows. So if we come down lower, take out those lows right there, take out these lows right here, what is retail going to do at that point in time? They're going to look at this chart, they're going to look at the weekly, they're going to look at the monthly, and they're saying we're going to 10K or we're going to 12K or we're going down here. So I'm just going to short it, short it, short it, short it. Instead, it takes out that liquidity into the market. Once that liquidity is out of the market, right, if we see an algorithmic introduction here, we can look for the break of structure to the upside with displacement as far as how that occurs. Once that is given to us, we can look to take this trade to the upside at this point in time. But still not there for Bitcoin as far as this goes. We can see the daily chart depending on how this closes. We could definitely see delivery lower. I'll be looking at a daily supply zone here at 19,136. Depending on how this close go for possible entries of shorts, taking it down into that area of liquidity. Obviously, I would want a lower time frame entry as far as this goes because on a higher time frame chart, we're not looking at very much R&R on this move to the downside right here. Even if you were to take it to these highs or these highs right here, a little 2-to-1, 1-to-1. Not exactly what I'm looking for on a move to the downside. It would have to be a lower time frame entry to be able to catch that move to the downside before we have a possible reversal. But until that happens, until we see that reversal to the upside, again, still looking for downside. It's going to be the same thing we're looking for over and over and over again until we are proven wrong. We've been looking for downside over and over and over again until we've been proven wrong. Have we been yet to be proven wrong? No, we haven't. There is an area where we might have been close, but then what happened? We broke structure to the downside. So instead we created supply, and now we can see continuation possibly into these lows right here overall. Bitcoin and ETH, pretty clear as far as what I'm looking for. I'm going to go back to the gray flow chart now. If you guys have any questions or anything like that, please feel free to either type it in stream chat. You can type it in crypto chat, FX chat, wherever you want to type it. Just make sure to @ me, and I'll definitely be looking at that for you as far as that goes. But ETH, again, same exact thing. On the gray flow chart, I kind of have these highlighted areas of liquidity that we can start to see right here. Retail starting to buy up this quote-unquote support on this move to the upside right here. Maybe they say it's a flip zone, right? They're like, maybe they see it as a flip zone. Whatever they see it as, we can start to see those equal lows that are being created, that trend line liquidity that's being created on this move to the upside right here. So again, what is this going to do for retail? When we get a breakdown, they're going to short the retest, right? They're going to short this retest. They're going to take it to the downside. And where are they going to put their stop losses? They're going to place their stop losses here. They're going to place their stop losses here. They're going to place their stop losses here, here, and here. Why? Because they don't want to be wrong. They don't want to be wrong on the move to the downside. So when they short this is going to be that area that they start to place their stop losses. But we understand that from our overall higher time frame narrative, all we're doing is coming back into discount of a low that had sponsored a internal new high. We could come into there, fill that, and now that we would fill that, that would get retail shorting to the downside, giving reason for price to continue to the upside from a bullish internal market structure, right? And we'll look for the confirmation of that zone. So if we come down to these lows right here, retail will start to short, put their stop losses over these highs, again giving reason for price to break to the upside. Once it does, once we see that impulse to the upside, we'll look for the confirmation. So again, a break of structure to the upside, putting in that higher low, and we'll look for the actual reversal as far as that goes. But you'll start to see in these situations where retail is starting to get in because they want to catch a bottom, they want to catch a top, whatever it is, they want to be in early, right? But if you start to remain patient, you'll start to see that's when you catch those actual bottoms, and that's when you catch those actual tops, and that's when price runs away from your entry exactly how you want it to. So getting into these situations to where instead we're thinking in probabilities and instead we're waiting for setups to occur and waiting for that patience, utilizing that patience, right? If we get into those situations much more, then we'll start to get that professionality that we're seeking as traders, right? Instead of saying, oh, well, last year I made 60K because I longed this and held for however long, right? Instead of that, now I'm saying I made 60K because of a profitable system that I have in place. And now I'm proud of that. Now I can go show that to people because this works, right? And it will work. The markets will always move like this. Ever since there is human emotion available in these markets will continue to move like this. We understand that 90% of traders fail in this market. 90% of traders become unprofitable. Me, I don't want to be that 90%. You don't want to be that 90%. You want to be that 10% that enters when the other 90% is not entering. So that's why I personally always talk about news, as far as news being the reason, right? The catalyst. I don't trade based off of news because who else is showing you that, right? If they're streaming to thousands and millions of people that GVP or whatever it is going to go down, then why would I be looking for downside as far as how that goes? Because I already know that 90% of people are looking for downside. So 90% of people are going to short this asset and 90% of people are going to have short stop losses, right? And then you go back and you look and you can see that price breaks structure to the upside and price shows that fair value gap and that algorithmic entry, that manipulation that we're looking for. So instead of trying to be right, instead of trying to follow the rest, now I have that profitable system because I'm looking for the same thing over and over again. Once that comes into play, I can enter my trade and walk away. So within these situations like this to where you want something to occur, but it hasn't occurred yet, I now have that ability to remain more patient. Instead of saying, oh, I'm just going to enter on this trade right here, I can now wait for the higher low to be formed, the new high to be formed once we get this break of structure to the upside. So now even if I'm trading a daily chart, I still have entries here with already much less risk, right? Already much less risk. Even though this is a daily chart, I'm already trading with much less risk. I'm already gaining more profitability, and I can hold for that overall narrative because all I did was remain patient until it came into play, right? Until that actually was shown. Now I have that availability, I'm entering that trade, and I can walk away. So understanding that losing is a part of the game is going to bring way much more comfortability because it will happen. It will happen. But if you can take those losses as lessons instead of emotional downside, right? Saying, oh, I'm wrong because this, and this, or I just don't know what I'm doing. This is a rough week, whatever it is, right? Instead of maintaining clarity and saying, oh, I lost because of my impatience, and actually becoming accountable with how you make decisions in your mindset, in your narrative, that's going to bring what you want to see. That's going to bring that progress that you want to look for as traders. Because at the end of the day, you could be on charts for 9 hours a day. 9 hours a day. But if you're not showing that mentality that we need to seek as traders, then it doesn't matter how long you're on the charts. You're always taught, a lot of people are taught within this game that as a trader, right, you, or not even within this game at all, let's just talk about some real world effects right here. You were growing up and you were taught if you work harder you can make more, right? So at your jobs, whatever it is, the more hours you put in, the more money that you're gonna make, right? And that is the opposite as far as how this goes. That is the opposite as far as trading. So you sit there and say, oh, I want to trade, so I'm gonna trade for 9 hours a day. Maybe I'll get what I need to get at that point in time. And this goes back to what I was saying earlier. It doesn't matter the strategy you have. If that mentality and that psychology is not there, then that strategy will not work out. That's just as simple as it is. That's why you see breakout traders, and that's why you see EMA traders and quote unquote retail traders that are profitable out there, because they have a better mindset than 90% of the people out there. They have that risk management, and they're looking for the same thing over and over again, even if they're using EMAs, right? Or even if they're using triangles, whatever it is, they're looking for the same thing over and over again. Once that comes into play, they're entering their trade, holding to their take profit is hit, and now they're profitable, right? So instead of trying to be right, try to be profitable. That's as simple as I can say it, right? So instead of trying to catch that top, trying to catch that bottom, now I'm looking for my trade. Once my trade comes into play, I'm entering, walking away, and I'm good to go. So we need to get rid of that I can't lose mentality, and we need to start to get into the I could lose mentality, right? And I'm okay with losing mentality, because losing is a part of the game. If there was anybody out there who was 100% right 100% of the time, everyone would be following that person. Is there anyone out there, right, that is right 100% of the time? No, because losing is a part of this game. Manipulation is a part of these charts, and manipulation is how these charts move. If these charts were not manipulated, we would only see up only. We would see down only within certain narratives, within certain charts, within certain assets. The price would be going one way 100% of the time, because it's quote unquote simple. But we need to understand that in a multi-billion-dollar market where manipulation is going to occur, and that's how price actually moves, because it moves to liquidity, then we can maintain that comfortability and that profitability, because now I don't have to be right on this move to the upside. Like I was saying before, if price were to come up here and I'm taking my first profit at this weak high right here, and then it comes into this supply zone and instead decides to go down, oh well, right? I was right on this trade. I still gained a 1 to 10 or whatever it is on this trade to the upside right here, because of this narrative that was shown. I didn't have to be right on price coming to these highs right here. I didn't even have to be right on price coming to these highs right here. I was able to make a decent percentage from here to here, right? On this structural narrative from this play that had occurred right here. That's all I have to do is hold for this, take my first take profit here. If I'm wrong, then I'm wrong. And now all of a sudden I can say, okay, we broke structure to the downside. Instead, now I can look for a short at these available areas right here. And now I have more opportunity coming into play, and I can start to learn the market and learn the behavior and get into where the chart is actually going to move at that point in time, because now I've been disproved on my bias, but I'm still profitable. Was I right? No. Was I profitable? Yes. Profitable is what counts. Being right doesn't count, right? Your Instagram traders or anything like that, that doesn't count. MenTFX talks about quote unquote chart porn, right? Those people out there that are sending those charts that just seem like they hit every single time. But it doesn't matter. If you can't go in there and look at that yourself, then you'll start to see. Where that comes into play, right? I have a lot of situations, and you guys might not see this a lot from me, to where I'll have a bunch of zones set out, right? Let's say I had a zone right here, and I'll have a demand zone on this move to the upside right here. I'll say, okay, maybe it's making demand, and maybe I'll take this trade to the upside, and then I'm disproved, right? There are going to be a lot of zones that you're going that are going to get quote unquote wrecked. There are going to be a lot of situations that you're going to fail, right? You're not going to be right. But if instead I can take that as a lesson and say, oh well, this was a distribution. After the distribution and a large displacement, instead I should have been looking for the fill of this fair value gap right here. As you can see, we came up, filled that fair value gap, ran the highs right here. After a distribution, we look for a redistribution, accumulation, ran the highs, distributed again. I could have been looking for short trades instead of long trades within this certain area. So instead of saying, oh, this was a higher high, higher low, break of structure to the upside. We're just going to continue to the upside from here. Now, instead, I'm saying, okay, supply was created on this move right here. We took out the demand that had caused this new high. So now this entire top narrative, everything that is right here, is now out of play. I'm not even worried about anything that had happened right here. Why? Because this demand zone was broken by this displacement. So now I've been disproved on this move to the upside right here. It was broken to the downside, and you can see flip zone as well, right? Where that actually comes into play. Now I can go back and look at why I lost. So now the next time this comes into play, I can now look for shorts instead of longs, and I won't be on that wrong side of the chart. I've taken this as a lesson than I have as, oh, I have no idea what I'm doing, right? Because you really don't have any idea as far as where the market is going to go. So if instead we can start to prove and disprove ourselves wrong and take those as lessons over I have no idea what I'm doing, then you're going to maintain that profitability and that comfortability. But that was just a little ETH analysis as far as how that goes. But I mean, again, we've been talking about months at this point in time at this zone over here. If we can take out these lows right here, break underneath, that will get retail shorting, taking this to the downside. They want ETH 400, ETH 10K, or not, sorry, BTC 10K, ETH $400, right? We know that once that happens, that doesn't show it, meaning if everybody wants the same thing, that's not how it's going to come into play. When have you gone on the news or gone online, gone on any types of assets, any types of charts like this, and the general population has been correct on the direction? When has that actually occurred? Just really think about that. Go back on YouTube, go look at certain narratives, go look at Twitter traders, right? When everybody wants the same thing, it's not going to happen. When the 90% is looking for one way, we always see it go the other way, always. And that goes into that little Lightning McQueen thing. If you're turning too hard to the right, it's gonna go left, right? If you're focusing so much on price coming to the upside, even though it's not there, it's gonna continue to the downside. That's just how it works, because now all of a sudden you're placing liquidity at these lows over and over again because you want to be right, you want to catch that bottom, you want to take this trade to the upside, and then all of a sudden you're stopped out of your trades and you have no idea what you're doing, right? So instead of getting this mentality to where, oh, I'm a loser, I don't know what's happening, if I can take that and instead take them as lessons and put them as something that I can actually learn off of, then I will gain that profitability that I'm looking for. But again, for ETH, we're looking for price delivery lower into this 2-day fair value gap. We could even see price come to this 1107 area right here before we have that move to the upside. Again, I do like how this is starting to show. We're creating a lot of buy side liquidity before we are coming into this zone right here. So if we can see that move to the downside with impulse and then see that break of structure to the upside with impulse, leaving that imbalance, then we can look for where we can possibly get into those trades. Algorithms in these certain situations push price to the downside. So they're actually entering over here. And let's just talk about what this means. Right, so a lot of people are saying, okay, algorithms are entering here, or maybe on this move to the upside, whatever it is, right? If we want to understand how we're actually manipulated, that's going to bring much more comfortability, meaning we can see that price is starting to create this liquidity, right? We have this sell side liquidity that we have right here, but where did algorithms enter on this to the downside? They actually, and let's just bring out a daily chart, bring this back. Where are we at? Okay, right here. But algorithms and institutions actually enter here. They actually open up short positions on this move to the downside right here. They open up short positions and push price to the downside. And let's just show this out visually. Let's bring this replay mode back. And then let's just bring this to the hourly chart. But on this move to the downside right here is where that algorithmic introduction occurred. Why? Because they're sitting here, they're pushing price down, and let's just show this out visually. They are pushing price to the downside over and over and over and over again, right? Just pushing it down, pushing it down, pushing it down, pushing it down. And then once they have pushed it down and taken out those lows right here, what does that do? That opens up the liquidity in the market for them to now enter longs, because we need to understand, as the composite operator, as the higher entity, that there is every buyer for a seller, right? But what about that one person out there, that one entity that doesn't have a available buyer or seller for them, meaning they have so much money, right? Billions and billions and trillions of dollars, that they don't have an available seller, so they have to cover their own positions, right? So once they push it down and open up that liquidity in the market, they can now enter another position. They can enter those long positions. So now that they start to enter those long positions and they start to push price to the upside, we have to remember that there are still short positions over here that are now in drawdown. This move to the downside is now in drawdown because of this move to the upside right here. So they have shorts in drawdown as price is coming up to these areas, and they have longs that are starting to maintain profitability, right? So now when we see price come down back to those areas to sponsor it, all they're doing is taking profit on their longs and then exiting their shorts. They're exiting their shorts at break even, maybe exiting their shorts for a little bit of profit. And then now that they have exited their shorts, opened up more liquidity into the market, they can now enter more long positions. So now where they started to enter long positions, they can now enter more long positions again. And then we see that reversal. So instead of looking for the same, or not looking for manipulation, right? Just looking for a bottom, looking for a top, whatever it is. Now I'm waiting for algorithmic introduction, waiting for that manipulation to occur, because this is how they are manipulated. They enter their trades to the downside. Shorts are now in drawdown. Their longs are in profit. They start to take profit on their longs. We start to see price come back down to where they shorted originally. They open up their, they take out their short trades. So now more liquidity is opened up again, and they can now re-enter their long positions, and they can now push price in the opposite direction. So if we understand this is how the manipulation occurs, this is what I'm waiting for every single time. I'm waiting for that manipulation, waiting for that break of structure. Once that occurs, I can find where they entered, and where they entered is going to be shown with that imbalance, with that demand and supply, and with those certain setups as far as how they come. Because price was pushed so quickly that it opened up the spreads within the market. Now that it opened up the spreads within the market, not all retail traders can enter these trades, right? So now that there's opened up the spreads, we have unfilled orders within this area. It is coming back to the unfilled orders. They're taking out their other orders, opening up the filled orders, and then we can see that actual manipulation and the expansion following that. So before I kind of end things here, we got about 5-6 minutes. Does anyone have any questions or anything like that that they wanted to ask about either losing, how that works, right? And something I'll show you too in the end here is a losing streak P&L, how we can start to get out of that as well when we do get into losing streaks. But just as far as this goes, if there's any questions or anything like that, just feel free to let me know. You can type it in stream chat, any of these chats, right? Again, crypto chat, FX chat, wherever you guys want to put it at. But let's talk about now a losing streak before we go ahead and end this stream here for Sunday. Again, with Bitcoin and ETH, we talked about the narrative. I will be posting that as well to crypto chat and to the lessons as far as what we are looking for on that. But I'm going to go ahead and get out of replay mode here, and we'll go ahead and bring this down, and we'll talk about losing streaks now. So there are many times in the market, right, where we have losing streaks. We'll have a month that's a losing streak, or a certain week that's a losing streak, but we need to understand how we can get out of those situations, right? Because something too that I believe this was Mentafex that he showed, but this really cool analogy as far as your overall P&L. And he said, okay, look at here. He said, let's see this trader right here that was making good trades, right? This is his P&L, and then all of a sudden he has a losing streak, right? And he might be back break even before 2 months or however that was. But if you're not going to work on your edge, right, you're not gonna see that return up into these areas right here. But now what if I were to take this entire P&L, right, and then clone this and drag it out in time, right? What if I were to take out now this one, close this, or clone this again, right? Let's clone it one more time and drag it out in time. Is this system overall unprofitable? I don't think so, right? This is a profitable system, because as we can see, even though we had those losing streaks, we stuck to it, and that still brought that profitability that we were looking for over time. Right? So if we can understand in a game of probabilities where you will lose, and we can continue to maintain that mindset as far as our system and trust in our system, then we will see this over time instead of just a losing crash and then the crash, right? And now your portfolio is at zero, you're liquidated, whatever it is. Instead of that, now I'm looking for the same thing over time because I know the system is profitable. I know it will bring me what I want to see. So if I continue to maintain that mindset, then over time, this doesn't look so bad, does it? Doesn't look like we were at 50% of what we started off at, right? Now all of a sudden I'm 300, 400% in profit as far as my portfolio goes. So this very, very, very important. Take a step back. Don't try to get it now. Don't try to rush it now, because over time this will occur. This will occur. If we can stick to our system, stick to how we look to enter trades, stick to why we look to enter trades, and stick to when we look to enter trades, then we will continuously maintain that profit and continuously see that overall P&L that we are looking for to the upside, right? So again, thank you everybody who had popped out. This was recorded and will be posted to YouTube after. But if you guys have any questions or anything like that, I'm just going to leave it up for a minute or so. You guys can type again within anywhere. If not, that's perfectly fine as well. I will be posting those sentiments as well for Bitcoin and ETH as far as what we're looking for the week to anyone who is not able to join in. But again, thank you guys, everybody who is here. It's a Sunday night. The fact that you guys are even here listening to this, listening to me rant, listening to me talk to you guys how you can maintain profitability and start to get better within yourselves already puts you above that 90%. That won't even go watch a 20-minute YouTube video on institutional candles, right? Or won't even go watch a 30-minute video on how they can better their psychology, on how they actually make decisions. Because now that you're here and actually showing that work and actually putting in what we want to see, then you will maintain that. Oh, you're good, brother. You're good, brother. As far as I don't know if I server muted you or not. Oh, there's no sound on YouTube. That's interesting. Okay, I'll get that fixed. I appreciate you, Braden. But yeah, I did have it posted and everything like that. This was recorded, so I'll go ahead and post that after. As far as the YouTube stream goes, that's a little annoying. But yeah, no problem, Anonymous Bread, no problem. But yeah, man, that's literally all it is at the end of the day. If you want to put in that work and do that for yourself, then you will maintain what you want to see at the end of the day. If you don't, then you won't. That's as simple as it is as far as what we're looking for, how you're going to take trades, and how you want to maintain that profitability overall. Because I personally could sit here every day and show you guys these charts and say, hey, I'm looking for this right here and looking for it to go right here. But is that going to teach you what you want to see as far as how you can actually look for it? Because now if you don't go on the charts and you're not looking for that and instead saying, oh, he's just right or he's just wrong, now you're just blaming it, right? And now you're not getting what you mean. Dojang was asking if I could check the RSR chart. Yeah, I'm going to go ahead and take a look at RSR real quick. USDT. RSR, man. Well, this is interesting. Okay, so let's go ahead and do our top-down analysis first from our higher time frames to our lower time frames. So on the weekly for the USDT chart, we can see that we took out these lows right here. After we did that, we are starting to see what is a weekly break of structure to the upside. We have this large wick up into the supply zone right here. We created some buy-side liquidity as well. And then we broke structure to the upside right here. We do have that weekly imbalance as well as this demand zone. Here at the 0.00663 range. Let's go ahead and bring this down now from the weekly to the daily. See that we had that large move up as well. We took out the buy side liquidity, created another zone of demand. So there are two areas that I would look for price to mitigate and continue to the upside from here. Overall, I would want to see a move into discount, taking out lows. Right, these equal lows that we have right here, that's going to get people into shorts. And then once that occurs, we can look for the displacement, break a structure to the upside for the overall continuation. This does look, this is looking a lot more bullish than it is bearish at these price levels. We do have a lot of buy side liquidity as well. And I think you were saying something about RSR news as well. I wasn't too sure about that, but based off of how the chart looks, it is starting to look pretty good as far as longs go. I would want to see a return back into this 00660 range on alts, but something I will say for alt charts, and I say this almost every stream, as far as what I look for alts. Once I have that higher time frame narrative in play for Bitcoin and ETH, right? I have that large break of structure to the upside within our certain narrative that we have right now. Then I start to look for higher time frame alt charts to look to take those trades to the upside or the downside as far as that goes. But before that happens, before ETH and Bitcoin moves, then I personally don't believe a lot of alts will move. And if they do, it's either just based off of news or just based off of retail liquidity. RSR, I do know, is a little bit illiquid as far as the market cap on this chart, but with the news and with the recent news drops, we could definitely see a lot more liquidity coming into this certain asset right here. But until we see that move down into these areas, so I'd watch the 0.00844 and the 0.00663 range. But until that happens, I'm not looking for the continued upside at that point in time. But yeah, that was pretty much all I had for you guys today. As far as how we can better ourselves. Again, I appreciate everyone who had popped out. I will look to fix that YouTube sound. I appreciate you, Braden, letting me know as far as that goes. And yeah, so thanks again, everybody who had joined. Thanks again, everybody who had popped out. No problem, brother. No problem. Again, this will be posted to YouTube once it's completed. And thank you guys all for popping out. I hope you guys all have a great rest of your day and or night. Peace out, y'all.